Meanwhile, on Wall Street, stocks rose ahead of that key meeting on trade, but the gains were muted. The Dow Industrial Average rose just 73 points. We're now at 26,599. NASDAQ was up 38. The S&P added 16. But check out some of these numbers. For the month, the Dow notched its best June since 1938. The S&P posted its best June since 1955. And for the first 6 months, the S&P posted its best start to a year since 1997. But if you looked at where the money flowed in the first half, that told a different story. And Bob Pisani explains.
Investors appear very divided over the global and U.S. economy in the first half of the year, at least if you follow fund flows. Many seem to be positioned for some kind of global slowdown. So it makes sense that bond funds were big winners in the first half of the year. Taxable bond flows, those are government and corporate bonds, they jumped 11% in the first half in terms of the flow, the amount of money going in, particularly in the longer duration bond funds. That's money going into the funds, remember. So municipal bond flows, which are exempt from federal and most state and local taxes, also rose up 9%. And then these are, again, are flows. Compare that to stock fund flows, a measly 3% increase. Most of that goes into those low volatility funds, which are defensive in nature. But on the other side, there is evidence that many simply believe rates will be lower for longer, and that it's not necessarily telegraphing some slowdown in the global economy. For example, high-yield ETFs like the HYG, they've ebbed and flowed in price all year, but they've still seen significant inflows. Right now, investors seem not to be too worried about the fact that these corporations with these junk bond ratings, they don't seem to be worried they're going to go under anytime soon. That's important because these funds would be the first to turn down if there was any consensus about a U.S.-based downturn. As for the big gainers in the year, the surprise has been the huge success of the IPO market. The Renaissance Capital IPO ETF, which is a basket of roughly the last 60 largest IPO of the year, is up 35% this year. That's double the performance of the S&P 500. That success is guaranteeing that other IPOs waiting in the wings, WeWorks, Peloton, and potentially even Airbnb will be eager to find a way to go public in the second half of the year. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.